really expect that these kind of things happen and trickle down to our markets. But I think what we've seen over the last few days is a very stable recovery. This is what we wanted. I think from that 10, 11 weeks of consecutive selling for the markets, FI is making a gradual comeback. At least that selling is behind us in terms of the cash segment. You're not seeing any major retracement on the index positions on the future side. So that is something which I believe could probably linger on for the markets in terms of a big question that when is the ratio, the net short ratio for the FII, which is almost at 91 to 92%. I think when is that going to retrace back towards the, say, an average of 60 to 65%? That I believe could probably soothe the nerves for market participants over the near term. But it's been a no complaints market because you've seen so many sectors making a very strong comeback. You've seen the IT stocks, which was a more beleaguered sector. These stocks have made a very good comeback for themselves, led by large cap names. And then the mid cap IT stocks. You've seen PSU banking stocks yesterday showing signs of a breakout. Defense stocks have started to look attractive yet again. So most of the underperforming sectors as well as stocks are making a comeback. That itself, I believe, should probably just about pep up the mood of, maybe a short-term trader or an investor.
But that's the thing, right, Kunal, that while the index is standing quiet and resilient, there is so much churn within that, right? Are you seeing any clear signs of leadership or weakness? Because now even IT has participated, the weakest of the lot.
So the strongest sector, even after yesterday's 2% cut, is auto. Without any doubt. So, we may look at it that there's a reversal in the auto stocks, but then you look at it in the manner in which how the stocks have performed. If it's a 20% jump for many of these auto stocks, then you're not looking at a 1 week, 2 week or a 1 month rally. You're looking at least a 3 month to 6 month rally, if not maybe a multi-year rally, which could start off for the auto stocks.
From here?
Even from here.
Okay.
So because these are strong sectoral moves which start off, because you see one leader, Maruti and I think Asha Motors were the first ones to break out, and then it was followed by Hero MotoCorp, Ashok Leyland, Escorts, TVS Motors, and then all of them managed to chug along. So I think it's a classical sign that this is a strong sectoral play, and this is something which is going to last, for a decent period of time, and then followed by short covering for many of the other sectors like IT, defense, PSU banking names. These were huge underperforming sectors over the last, I think, 10-15 weeks. So there's bound to be, that kind of a sector group which could participate. All of this indicates that, when sector health starts to improve, gradually the index also starts to, lift off. The only concerning point, as I was pointing out earlier, that the FIs are still short on the index futures. The moment we see that short covering coming back into the index futures, that's where the pace of rally for the Nifty will increase up higher.
Okay, so that's the take coming in on the market, the strategy and the way to go. But we also have Somil Mehta joining us on the show. And Somil, hi, morning. Thanks for your time today. Now, give us a sense of where you're seeing the market headed today, because briefly we've touched our 25,000 mark yet again. And as has been the case for the last couple of weeks, we've touched that and we've come back down. But today we seem to be very close to scaling that mark and holding. Is that something you're seeing for the market?
Good morning to everyone. Absolutely, I'm positive. I've been positive for a little while now, and I am definitely very positive on the markets breaking out of this range on the upside, and on the upside the targets would be much higher. 25,500, 25,600 would be a short-term target, and about 26,300, 27,000 probably in the long-term outlook. But yes, in the very short term, I'm expecting this range to break on the upside. The resistance, the crucial resistance is 25,150, which is the previous swing high. So that is a very, very crucial level to watch out for. Yes, 25,000 level, a psychological level, is a very, very crucial hurdle as well. But even if the markets are in the range, I'm more focusing on sectors and stock specific action. I can see pharma doing really well. I can see railway stocks doing really well. Metals have picked up. So I think we should be more focused on sector specific and stock specific action.
Okay, let's now discuss the stock strategies which our chartists are recommending. And Kunal, let me start off with you first. First, the chart of the day. What is that one stock that you think investors have to trade in today?
So I think Bharat Electronics. I think that's a chart which I believe is a classical case of a breakout, ending 10-15 weeks of a major price correction. And we've seen leadership, coming back into the stock price every time the sector starts to get into a trending up move. So this, I believe, could be the, stock to watch out for, maybe not just today, but I think potentially over the next, 1 week also. I would expect a strong swing upside in Bharat Electronics. I would, place a target closer to 400 with a stop loss at 381.
All right, that's the call coming in on Bharat Electronics. That's the chart of the day coming in from Kunal, and along with that, a whole host of defense counters were also seeing very good move, so we'll watch out for that. But Somil, what about you? Which stock are you looking into?
Defense and pharma, these two sectors are looking great. So I've picked up Mazgaon Dock. Mazgaon Dock is looking great. Mazgaon Dock has formed a small triangle and broken on the upside, taking support at 200 daily exponential moving average. Great setup for a medium-term outlook as well. Stop loss would be 2650 and the targets would be 2950. I have pharma stock, hospital stock, Apollo Hospital in my list. Small flag pattern broken on the upside, resuming the uptrend. Already in the uptrend in the short term, medium term, both taking support at short term averages. Great setup. Stop loss would be 7,800. Target would be 8,100.
All right, those are the buy calls coming in from Somil as well. Let's watch out for that. But other than BEL, Kunal, any other stock where you are looking at this morning which is looking good to you?
So it's one of the stocks which I recommended yesterday, SRF, from the specialty chemical space. I think it's an excellent chart, brilliant risk reward, because the stock is still at its 200-day moving average. And when you look at this comparatively, even with respect to the other peers, the stock is available at a much better price levels. Even on the short-term charts, the stock has formed a solid base, consolidating at this level about 200 DMA, just around the 2850, 2900 mark. Yesterday, we saw the stock, showing signs of a good momentum surge. So I'm expecting a follow-through up move for SRF. Targets remain the same at 3050. For traders who are looking at a fresh buy today, keep a trailing stop loss of 2925.
Okay, so that's the couple of stocks that have made it to Kunal's radar, and SRF looking particularly attractive. But on that note, we'll slip into a very short break and talk about the trade setup today on the other side.